I'm Matt Bouchard with NAREIT.com here in New York City for REITWeek 2015. Joining me for this CEO Spotlight is Denny Oklak, Chairman and CEO of Duke Realty Corporation. Denny, thanks so much for joining us.
Well, thanks, Matt. Pleasure to be here.
Now, following the company's repositioning, bulk distribution facilities now make up more than 70% of Duke's portfolio. What is your outlook for that segment in the near term?
Well, the industrial business is really very good at this time. When you look at our portfolio, we're at really near record highs for occupancy. Our in-service bulk portfolio is almost 97% leased today, which is really terrific. And the other piece of that is the development pipeline is very strong also. We've been running at $400 to $500 million of industrial development for the last couple years, and a lot of that has been build-to-suit activity, so very, very low risk. And we've done some limited speculative development around the country in some of our markets, and we've done very well leasing that space up also. And overall, when you look at the industrial scenario around the country, supply and demand seem to be relatively in balance in almost all the markets. So it's a very good time to be in the industrial business.
Now, medical office, of course, is the company's other main focus. Are fundamentals looking as strong as they have been recently there?
Yes, the MOB business continues to be very strong. We're seeing a lot of consolidation in the healthcare industry in a couple areas, a lot of mergers between some major hospital systems, but also that industry's changed in that a lot of the physicians are now employees of the hospital systems. So that's really been very good for us in that business. Our tenant a lot of times now is the major healthcare systems, which are very financially stable, highly rated. So I think, again, that's very favorable. And really, when you look at the demographics in the United States today, we really like the outlook for that business over the next number of years also.
Great. And of course, the other part of the repositioning is the company completed the sale of its suburban office portfolio in the first quarter. How do you expect to use those proceeds? Will it be more for acquisitions in the industrial or medical office sector? Is there one that sort of looks like a better buying opportunity now?
Yeah, we've got plans for most of the money already. It was a little over $1 billion sale, and $200 million of it we took back as a note that will be repaid in 2016, so we've got some time to deploy that money. We also went out and went into the public markets and repurchased some of our corporate unsecured debt to really help delever the balance sheet. So we spent about $500 million on that. And the rest of the proceeds are really targeted for the development pipeline, which I said is strong, and some limited acquisitions, mostly on the bulk industrial side. So again, it hasn't taken us long to be able to redeploy those proceeds, but we were very pleased with the sale and like all the repositioning that we've done and where the company is today.
Great. Denny, thank you so much for joining us.
Thanks, Matt.
For more on this and other REIT news and analysis, be sure to visit REIT.com.